Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me remotely, we have Phil Mackintosh, who's the chief economist at Nasdaq, to review how policymakers and investors are starting to model out the global economic impact of the coronavirus as the race is on to mitigate the spread of the virus and provide stability to the markets, consumers, and the economy. Markets opened sharply higher, looking to make back all of yesterday's losses. Phil, is there anything out there that's conclusively positive on the news front?
Yeah, not as obviously as you would think. I mean, we were talking yesterday about the $1 trillion rescue package, which we still haven't seen. You'd think that maybe we would have some good news on US new cases, which we still haven't really seen. But there are a couple of bits of positive news, and maybe that's the green shoots that have made people start to think there is an end to this and it's not years away. The two things that stand out is Italy has now seemed to turn the corner, and they've started to see less new cases than normal. So not reduction in cases, but slower growth. And the other good news is that Wuhan has come out from lockdown and restarted their subway and getting back to life as normal there too. I think the two important things to remember there is Italy, it's taken them a month to get to this point, and Wuhan, it's taken them 2 months to get to the point where they're going back to work and back to normal. So some of the other comments that might have sort of changed the rhetoric here, which include the President Trump's comments last night, just saying this won't last forever, and maybe next month we'll be back to normal. Next month is not far away, so I have a feeling we need to be disciplined to make sure that we don't spread this to other people for a little bit longer yet. But it does seem like the commentary has turned to how much longer until we can all get over this, and then things will get back to normal.
Yeah, I think it's a great point that you put up, and President Trump actually just tweeted about this around 10 minutes ago, that he's looking to get people back to work sooner than later. But if you take cues from the private sector, state and local governments, they seem to be siding with the medical community more so than getting everyone back to work for the sake of getting the economy moving. And of course, it's understandable everybody wants to get back to work. So let's end this on a good note. Markets are volatile, but we're seeing volatility and the VIX are trending down, and that has not been the case over the past 3 weeks.
Yeah, I mean, the VIX and the actual realized volatility in the market got to very extreme levels, the sorts of levels we saw back in 2008, 2009 in the credit crisis, and it has actually started to come back down. So although it still feels volatile, and yesterday we obviously had a huge range, about an 8% range, including the pre-market, in the actual stock market, the measurements for VIX, which is forward expectations of volatility, and the measurements of actual close-to-close volatility in the market have come down by a significant amount. So maybe we're getting to a point too where the markets have priced in a lot of bad news to come. Like we talked about yesterday, there's an expectation that the New York reports of new cases will be bad. But that's already priced in. And so the market's kind of now sitting tight to see what happens to the data. And in a week or two, do we see the whole world getting new cases under control? And we're in a position where we can see the end of the light at the end of the tunnel.
All right, Phil, thanks for the insight. As always, have a great day. Thanks so much for joining us.
No worries.
All right, and thanks for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.